Your rent just went up again. You're having the maybe we should just buy conversation again, but you're one step away from making a decision you'll regret. Maybe this week you've had that conversation, maybe with your partner, your parents, your mates at dinner, and the moment you bring it up, everyone's got an opinion. One side says renting is cheaper right now, interest rates are insane, you're better off waiting. The other side, usually your parents or your uncle at Christmas, says rent is dead money. And here's the thing, both sides sound reasonable and have numbers to back it up, but both sides are also using the wrong equation. I'm a mortgage broker. I've helped over 300 clients work through this exact decision, and I see the same mistake every single time. People compare their weekly rent to a monthly mortgage repayment and stop there. That's the whole analysis, and it's broken. The real comparison isn't rent versus mortgage repayment. It's how much money you'll never see again on each side. Whether you rent or buy, some of your money is never coming back. And that's the one line item most people completely ignore. When you add it in, it flips the entire result. By the end of this video, you'll know the hidden cost most people miss on both sides and the one assumption that flips the entire result. You'll know which side of this debate you're actually on based on the numbers and not just opinions. So let's start with what most people do. They look at their rent. Let's say it's $600 a week. That's roughly $2,600 a month. Then they look at what a mortgage would cost on a place in the same area. Let's say it's a $900,000 property. They've got a 10% deposit, so they're borrowing around $810,000 at a, let's call it 5.75%. That's roughly $4,700 a month. And they go, well, renting is $2,600 and buying is $4,700. Renting is obviously cheaper. Case closed. But here's what they've missed. And this is the part that changes everything. That $4,700 a month mortgage repayment is not all the cost. A chunk of that is principal. It's going back to you and building equity. It's money you keep. Rent, every single dollar is gone. You will never see a cent of it again. So the real comparison isn't rent versus the mortgage repayment. It's rent versus the money you lose when you buy. The unrecoverable costs. Let me show you what I mean. When you rent, your unrecoverable cost is simple. It's the rent and all of it's gone. When you buy, your unrecoverable costs are the bits of money that disappear and never come back. And there are more of them than people think. You've got your interest on the loan, not just the repayment, just the interest portion. On an $810,000 loan at 5.75%, that's roughly $3,880 a month in the first year alone. Then you've got council rates, water rates, strata if it's a unit, maintenance. And I'm not talking about a renovation. I'm talking about the hot water system that dies in winter, the roof leak, the plumbing, the stuff renters call their landlords about and owners pay for out of their own pocket. Most people forget all of this. They compare the rent to the mortgage repayment and completely ignore that owning a home costs money on top of the loan. Now here's where it gets interesting. When you add all of that up, the interest, the rates, the strata, the maintenance, the buying costs like stamp duty and legal fees, spread over time, sometimes the unrecoverable cost of buying is actually higher than rent, especially right now with rates the way they are. But sometimes it's not. And the moment it flips depends on one thing most people never calculate. It's what your money would be doing if you didn't buy. Think about it. If you're renting and you're saving the difference between rent and what a mortgage would cost, and you're investing that money, that return counts. That's real and changes the equation. But if you're renting and the difference is going to Uber Eats and weekends in Bali, then renting isn't the smart move. It's just the easy one. This is what your parents actually mean when they say rent is dead money. They're not wrong about the principle. They're wrong about the assumption. They assume renters aren't investing the difference. And honestly, a lot of the time they're right. So the real question isn't rent or buy. It's this. What are you doing with the gap? I had a couple come to me. They were living in a granny flat at one of their parents' places, paying zero rent. They were convinced the next step was to buy their own place, a $900,000 property in Sydney. That's what everyone told them to do. Get on the ladder. Stop wasting time. But when we sat down and we actually looked at their situation, they were in an incredible position. No rent, separate space. They were comfortable and their savings were building fast. So instead of buying one property to live in, they purchased 3 investment properties across regional Australia, all rented out, all building equity and all growing in value. And now, when they're ready for their family home, they'll have options. They can sell one, they can use the equity. They've built up a foundation that most people in their 40s don't have. And they did it in their mid-20s. That's only because they didn't follow the default advice. They ran the real numbers. Now here's the other side, because I'm not here to tell you renting is always better. That's just as dangerous. I see people who are ready to buy and are pre-approved, deposit sorted, but they're waiting because they want 20%. They want the perfect time. They want rates to drop. or they want the market to cool off. And every 3 months, the goalposts move again. I had a client saving for a place at $750,000. By the time they had saved enough for that price point, 3 months later, the same type of property was $800,000, then $850,000. They couldn't save fast enough to keep up with the market. And that's the vicious cycle nobody warns you about. You're being responsible. You're saving hard. You're doing everything right. But the market is outpacing you by 6 to 8 weeks every quarter. So you end up looking in suburbs you never wanted to live in. And by the time you adjust to that, those suburbs have moved too. The data shows that in some parts of Sydney, the cost of waiting 12 months has been $40,000 to $70,000 in growth alone. Can you save an extra $40,000 to $70,000 in a year? Most people can't. Not even close. So waiting isn't always being patient. Sometimes waiting is just falling behind and calling it a strategy. Here's how I think about it. If you're renting and you are genuinely investing the difference, whether that's in shares, property elsewhere, in something that compounds, then renting can absolutely be the right move. You're not wasting money, you're deploying it differently. And anyone who tells you that's dead money hasn't done the maths. But if you're renting and the gap between your rent and a mortgage payment is just disappearing into your lifestyle, then every month you wait is a month you fall further behind. Not because rent is evil, but because you're not doing anything with the advantage renting gives you. And if you're in a position to buy, but you're holding out for 20% because somebody told you that's what you need, challenge that. There are government schemes. There are lenders doing 10% deposits. There are options as low as 2% deposit now. Yes, you'll pay lenders mortgage insurance, but if LMI gets you into a market that's growing $40,000 a year, that $15,000 LMI isn't a waste. It's a leapfrog. The older generation's rule of save 20% before you do anything was built for a market that doesn't exist anymore. Prices weren't moving like this. Rates weren't structured like this. The game has changed and the rule book needs to change with it. So here's the bottom line. Rent versus buy is not a universal answer. It never has been. Anyone who tells you one is always better than the other is either selling you something or they haven't done the maths. The only comparison that matters is what money disappears forever on each side. And what are you doing with the rest? Run that equation for your income, your suburb, your situation. And if you don't know how, talk to someone who does. Not someone with an opinion, but someone who understands how to run the calculations. If you found this useful, subscribe. I'll keep breaking down the stuff that actually matters, not the stuff that just gets likes. I'll see you in the next one.